Welcome to financial reporting, which is paper 7 of the Institute of Certified Public Accountants. So paper 7, which is financial reporting, builds onto from the knowledge of financial accounting, which is paper 1. But in the same way, this prepares you for another paper ahead of us, which is the advanced financial reporting, which is paper 12. So why this paper and why do we study it? Understanding that the Certified Public Accountants qualification is preparing us to be accountants that are going to lead on the area of financial reporting. It's imperative that the principles that we obtain from financial accounting are built on now for us to start looking at the international accounting standards and also be able to look at the international financial reporting standards to see how do we apply these standards and how do these standards affect our reporting. If you remember very well, when we are studying financial accounting, mostly what we are looking at were principles. We're just looking at assets, we're looking at liabilities, we are looking at how do we prepare the statement of financial position, statement of comprehensive income. But as we proceed with financial reporting, we'll get to understand that, for example, if we are looking at inventory is not just an element of financial statement or maybe an element that we record in the statement of financial position, but inventory has a standard that governs it, which is IS2. So we'll be able to understand what does IS2 tell us about how to present inventory, how do we measure inventory, what disclosure requirements are required when it comes to inventory. So all that we shall be able to now learn, even when it comes to, let's say, your so-called non-current assets, which is mainly the plant, property, and equipment. So we'll be able to understand there's actually a standard on its own that gives us guidance on what to recognize. How do we recognize assets? When do we recognize these assets? How do we measure them? And how do we disclose? What areas of disclosure should actually come into play? So that is what financial reporting basically does. So it will build on your previous knowledge. Of course, it is assumed that you still remember your financial accounting. I know some of you might have been exempted this paper, but if either you've not been exempted, it is assumed that you know this knowledge. So if you're doing this paper and it's long time since you last did some classes of financial accounting, then it's imperative that you're going to also get back to understand a few areas here and there. So this paper on its own, of course, it will start with the financial reporting framework. And here we shall concentrate more on the conceptual framework to understand what are the requirements of the conceptual framework, what exactly should we do when it comes to following the principles from the conceptual framework. And then here, this will also give us an introduction in regards to the international accounting standards and international financial reporting standards and how those affect how we report various elements of a financial statement. So, and the next part definitely will be measuring the elements of financial statements. So when somebody says elements of financial statements, the first thing you should ask yourself, what are the financial statements? So the financial statements that we have, of course, is the statement of financial position, the statement of comprehensive income, the statement of cash flows, a statement of changes in equity. Of course, the notes to accounts also comes into play, but we'll not so much dive into those. But now we're looking at those different elements of financial statements, the assets, the liabilities, the incomes, the expenses. So we'll be able to understand how do we measure this? Because ideally, in financial either accounting or reporting, we do quantify. So how do we say that this asset is this value, how do we measure that asset? So the quantification aspect is very key. And we should also be able to understand how we prepare accounting records, leveraging on IS1, which is to do with presentation. Then we'll also be looking at aspects of preparing financial statements for internal and external use. We understand that financial statements have various users, and internally this could be management, this could be employees, this could be the board, because the board is also looked at as internal. Externally, we were looking at statutory bodies like URA. We're also looking at let's say investors. We're looking at customers that may be interested in these financial statements. We're also looking at suppliers that may be interested in these financial statements, and so on. And then we also be able to look at apply the selected international financial reporting standards. So we have quite a number of standards here that we are going to be able to look at, especially when it comes to this paper. So there are quite a number, and we are going to see them even as we proceed in the detailed syllabus. And then the other is to analyze financial statements. So here you need now to draw your knowledge on financial ratios, where we look at liquidity ratios, we look at the profit ratios, and so on, working capital ratios, and so on. So we'll be able to understand how to get into calculating all those, and then interpret accounting information and financial statements. This is also key. As a learning outcome, as a student, you should be able to interpret accounting information. When you see those financial statements, for example, issued by financial institutions and published in the newspapers, are you able to interpret? Are you able to understand that if they have said provisions, that this is what it means? If they are saying that this is comprehensive income, you now know what comprehensive income exactly means. And then we shall also be able to prepare consolidated financial statements of a simple group structure. So one of the key aspects here is that we are looking at an entity, a parent, that could have subsidiaries. So how do we consolidate the financial statements of the different subsidiaries with a parent to have a consolidated financial statement? Now, group accounting, of course, this will be a foundation kind of topic, because you did not cover this in financial accounting, but this is also preparing you for the advanced financial reporting, where you handle more complex group structures. So this will be basically a simple group structure for you. And then we shall be able to also prepare accounting records for entities under receivership, those that are, of course, insolvent, that are winding up, and liquidation. So that is what you expected in terms of learning outcomes. And then assessment, of course, this paper is just like most of the papers, is a 3 hours paper. And it has section A, which has a 1 compulsory question, and section B, which comprises of 4 questions. So as something like this, because this is a paper of August 2023, so it has this question 1, and as you can see, they are giving you a they are giving you a statement of financial position of this entity. After the statement of financial position, they proceed to give you some additional information in regards to what exactly happened. For example, they have given us something to do with inventory, so you know that you're going to apply some IS2 there. There is also a statement of profit and loss. You know what exactly you need to get from there. Then they have also given you values of depreciation, right? They have also given you aspects of income tax amounts. And then there is dividends, and so on. Then they're asking you to, in accordance with IS 7 statement of cash flows, to explain. So there's some theoretical element here, but then the key part is for you to be able to prepare your statement of cash flow for the period ended 30th June 2022. And then something here also, assess the competitiveness of GL in the market given the industry it operates, requires high volumes of cash, maintained with cash current ratio of 45, quick ratio of this. So this is again bringing us back to this analyzing of financial statements. So that is how the 40 marks were built up. And then now they'll give you these other, the smaller questions, although they also now have different standards that they are targeting. For example, this is looking at IFRS 15, which is revenue from customers. So to be able to understand this, definitely you should be able to have a good grasp of IFRS 15, which is revenue from contracts with customers. And then the IS 37, the one of to do with provisions, contingent assets, and contingent liabilities. So those are just 20 marks. And then you get down to another one, which is to do with, let's see, this is IFRS 6, which is exploration for and evaluation of mineral resources, and IFRS 16. So leases, so that is it. And then question 4, which is looking at IS 38 intangible assets and IS 36 impairment. And then question 5 also, which looks at IFRS 10. So there's something that you can see with each of these questions, that they have a reference in regards to a standard. So this paper is mostly looking at now the standards and seeing how do you apply the so-called standards. So when you get down to your syllabus, in the detailed syllabus, it will be able to show you now those key standards that this paper basically looks at. Like I said, the conceptual framework is one of the things that we shall look at. And there are different areas within the conceptual framework that you need to have a grasp of. Of course, the objective itself of the conceptual framework. Why do we have the conceptual framework? The ethics of useful financial information. You know that we have the fundamental, and then we have the enhancing ethics. And then we'll be able to look at the elements of financial statements, like I said, the assets, liabilities, expenses, and be able to understand their recognition. How do we measure them? What are the disclosure requirements on each of them? And in regards to the reporting framework, of course, as Uganda, the reporting framework is also governed by the Companies Act 2012. So be able to understand what does the Act say about the accounting and reporting requirements, and how does the Act also influence our financial and accounting and reporting. And then we'll be able to understand how do we measure elements of financial statements using different aspects like historical cost, modified historical cost, current cost, realizable or statement value, present value, and so on. And then being able to understand the advantages and disadvantages of each base. How do we value assets? How aspects of measurement of profits, understanding that we have two concepts, the financial and fiscal capital maintenance concepts. Then the preparation of financial statements under historical cost, current cost, realizable value, and present value. And then the presentation and disclosure. And that will help us get into IS1, which is presentation of financial statements. So we'll be able to understand how each of these statements look like this profit and loss, the statement of financial position, the statement of cash flow, the statement of changes in equity, and then get down to also look at the accounting policies and notes to financial statements, And then how we prepare financial statements also in regards to the International Accounting Standards, reporting standards, but also in regards to the Company Act 2012. So all that is within IS1. Then we shall tackle now IS7, which is now the cash flows, which is now looking at what are the different elements of the cash flow to do. We know that when it comes to cash flows, we divide the business in three activities. That is the operating activities, the investing activities, and then the financing activities. So we'll be able to appreciate the two methods of preparing cash flows, that is the direct and the indirect methods of reporting cash flows, then determination of cash flows, aspects of presentation and disclosure, and then interpretation of the statement of cash flows, and then what limitations do we have with the standard IS7. So all that is within IS7. Then we have something to do with earnings per share, which is IS33. So if you have followed some of, let's say, for example, entities that are listed on the stock exchange, the word earnings per share might be something that is very common to you. So the earnings per share is governed by this standard, which is IS33. So we'll be able to understand how do we calculate, or how do we measure the basic EPS, what is a weighted number of shares and consolidation, what is a diluted EPS, what conditions of restatement of EPS, and all that, including the presentation and disclosures of each of those different terms that relate to EPS. And then there's another accounting standard here, which is International Accounting Standard, IS8, which is now to do with accounting policies, changes in accounting estimates, and errors. So this is also a very key standard. We understand that businesses have different accounting policies. And accounting policies could be as simple as the depreciation rates that an entity has. So we shall be able to understand what happens when, for example, there are changes in policies. How does that affect our accounts, either retrospectively or prospectively? We shall also be able to understand accounting estimates, what exactly they are, and how those may also affect our accounts, just in case they change. And then IS2, which is to do with inventory, and this is valuation of valuation, measurement, disclosure of inventory. So we know, of course, the rule is that inventory is valued at the lower of the cost and the net realizable value as guided by IS2. So this standard helps us to understand how do we measure inventory at either cost, net realizable value, and then fair value. I think you remember when I was trying to show you one of the examined questions here, I think that was the first part of the question, and the examiner, as part of the additional information, clearly they were speaking of something to do with IS2. So it's important that you understand how you can measure inventory at each of these different, and how can you be able to determine based on the principle of lower of costs and the net realizable value. And then the aspects of presentation and disclosure. And then we have another standard here, which is International Financial Reporting Standards, which is IFRS 15, which is revenue from custom contracts with customers. So how do we recognize revenue for contracts with customers? So we'll be able to understand the recognition steps of revenue recognition, which include the identification of the contracts, combination of contracts, contract modification, aspects of identification of performance obligation, and then satisfaction of obligations. and then measurement of this revenue from contracts. How do we determine the transaction price, the aspect of contractional costs, and how do we present and provide disclosure requirements as well. So this is quite, of course, detailed, and all these areas will be covered under IFRS 15. But then we should also have an element of application of IFRS 15 to Islamic finance transactions. This is an enhancement within the syllabus, just to be able to now appreciate the aspects of Islamic banking as different countries continue to embrace them. Then we have this other standard, which is IAS 12, which is income taxes. So this one looks at the treatment, recognition, and measurement of your current tax assets and liabilities. It also looks at aspects of deferred tax assets and liabilities, and then provides for presentation and disclosure. And then continuously, again, this one also has the International Accounting Standards, which is IAS 16, property, plant, and equipment, which are your non-current assets that you draw from financial accounting. So we'll be able to understand what is the scope of the standard. Now, when it comes to these standards, you'll come to appreciate that each of the standards has a scope. So it means that anything outside that is not covered within that scope. For example, what is covered under IAS 16, it does not include the intangible assets. So those will be now in IAS 38. So it's important for you to understand the scope. What does it cover? So each of the standard will actually be able to provide that. And then we have the International Financial Reporting Standards, IFRS 13, which is about fair value measurement. How do we measure each of these non-financial assets, liabilities, and equity instruments? And then we'll be able to look at aspects like non-performance risk and presentation and disclosure. Like every standard also has this aspect of presentation and disclosure. So that is quite important that you appreciate that. Then IAS 21, effects of changes in foreign exchange rates. This also takes into consideration that entities that we support on the reporting might be either subsidiaries of international entities, or they may also be dealing in transactions that are in FX. So we need to be able to understand how do we prepare and how do we utilize the standard in affecting any changes that have happened in the foreign exchange rates. And then we have the investment property, which is IAS 40. So we'll also be able to understand the recognition, initial measurement, subsequent measurement, and then so on, and then not forgetting the presentation and disclosure. And again, we have this IFRS 16, which is leases, quite important. So we'll understand the lease terms to the lessee and then the lessor. And then we shall also see how does the lessee prepare their financial statements in terms of recognition and measurements. And then we'll also be able to understand the key two leases, that is the finance lease and operating lease, and how do we prepare or account for leases for both the lessee and the lessor. And then definitely, of course, using the different models here, like the 5-step model, in ordinary lease contract arrangement, the sale and lease back transaction, and then the presentation and disclosure. And again, also be able to understand how to apply the IFRS 16 to Islamic finance transactions. Then we have the accounting of government grants and disclosure of government assistance. This is IS 20. So it's a standard that has been around for quite a while. So we're able to understand how to recognize grants. What's the scope? Like what falls under this standard? Like I said, not everything falls under the standard. So before you start on a standard, it's quite important for you to just appreciate the scope of the standard. So how do we account for the capital and income related grants and any forgiven loans in case available? The capital and income approaches of accounting for government loans, argument 4 of each of the two methodologies or approaches. And then there's borrowing costs, also a standard on its own. And here we're trying to look at the objective and scope of the standard, the key concepts of the standard, arguments for and against capitalization of borrowings, and then how do we treat borrowing costs? What is also the scope of the borrowing costs? And then not forgetting the presentation and disclosure and the accounting versus the tax treatment of borrowing costs. And then we have IS 16, which is impairment of assets. And as you can see here, again, the objective and scope also comes into handy here. How do we identify what you may call a potentially impaired asset? And how do we account for one, estimation of recoverable amount of tangible and intangible assets? How do we recognize and measure impairment loss? How do we determine of recoverable amounts for cash generating units? And then the presentation and disclosure. So there are quite a number of standards, as you can see, that we look at. IS 37 is also very common with the provision. I'll just try to run through them here. Then IS 38, which is intangible assets. Then we have 41, which is agriculture. Then we have one on exploration and evaluation of mineral resources, as Uganda is on that journey. I think you saw one of the questions in this paper. The examiner was trying to get us to that kind of direction. So any standard that is on the syllabus can actually be examined. So one of the things that you need to do, I think it was here, one of the things that you need to do is to start appreciating these standards, especially if you're preparing for this paper, to ensure that you know these standards. There are a lot of materials that speak about these standards, because these are because they are international standards. Even when you just go and search online, there is a website which is usually very useful when it comes to some of these standards. It's actually by Deloitte. So when you go to that website, it's actually IS Plus. Let me just try to show my screen here. So you just go to Google and put in IS, either IS Plus or IS Deloitte. So it will bring you to this site. So this is just for your general knowledge. So when you come to this site, okay, accept all cookies, just come to standards, and it will have quite a number of standards here that you can be able to look at. And whatever you click on, for example, if it's revenue from contracts with customers, they tell you when it was issued. So they'll give you an overview. They'll give you the history of this standard. For us that studied this standard earlier on, those days it used to be, I think that was IS 12. So it evolved to get us to where we are here. Okay, so you can see, actually it was IS 11, but it also had an element of IS 18 revenue. So it gives you the scope. Like I said, the scope is quite important. It tells you what it covers, and it also gives you its exception. So very quite important. So this is a very good website that we shall use along our journey. But then for us, of course, our interest is to understand the standard, but also to now know how is the standard examined by the examiner. Because at the end of the day, knowing the standard is one thing, but then also being able to now apply the knowledge, because the examiner is, yes, they can ask you some elements of theory around the standard, but mostly what you need for this paper is to see how do I apply the standard. Because as we saw some of these questions, they give you information and then they want you to be able to apply the standard. So it's quite important for you to understand, first have the general knowledge of the standard, and now get down to the application to see how do I apply this standard. Quite important. So as we can see here, this is a standard on its own. So you know that as we explore our minerals, there's a guiding standard here. And then there's now an element of, it's not a standard, but this is the part of the financial interpretation and analysis. So here we're going to look at the different ratios, the profitability, the growth, the gearing, the activity, the investment ratios. And we also saw that it is something that the examiner also does not just want us to learn, but it's something that he does examine. So I think one of the questions here, I think this was the question, was trying to also test us on our understanding on aspects of analysis, because it is now giving us some of these ratios. For example, it's giving us the current ratio, the quick ratio, and whatever it's giving us, I think these are the industry averages. So, and then we're able to now calculate what the company's ratios are based on the information provided. So it's quite important that you understand how each of those ratios are computed. Of course, disadvantages and limitations of ratios. Some of these theory parts are very helpful because the examiner can just bring 5 marks on it, and it would really save you that 48 or 49 on this. So then we have we are now starting the business combinations. Like we said, part of our learning outcomes is to ensure that we learn how do we consolidate our financial statements. And specifically here, we do use a simple structure, because I said this is a foundation topic for complex group structures that you find in the advanced financial reporting paper. So this gives you a good foundation to be able to understand how do you, if there are different subsidiaries, how do you consolidate their financial statements with the parent, and like that. If it's an investment, how is that also consolidated? And then you also be able to look at aspects of the IFRS 10, which is consolidated financial statements, still building up from the combination. And then remember, our last outcome was to do with preparation of financial statements from for companies under liquidation and receivership. So quite a number of topics. If this is X and you're looking at the alphabet, these are about 25 topics and counting. So 25 topics and counting means that you need to jump onto this paper with a lot of seriousness. Why? Because these are quite a number of standards, And sometimes even the examiner, what they do is they bring a question and combine different standards in there, because when you're preparing financial statements, you do not just choose a single standard. You're basically going to find yourself in a position where you're going to have to have more than one standard being applied. Okay, so that is quite important. So that is how our syllabus looks like, and that gives you a snapshot in regards to this paper. Of course, to pass this paper, definitely, of course, there are key things that you need to really do. Of course, it's very important that you go through this information in terms of the standards. Like I've given you that website that will give you an understanding of the different standards, but also it's good for you to do a lot of practice. And you can leverage on past paper questions that are on the iSPA website. But you can also, this paper is also very similar to another paper at SCCA, which is it's called it's also called financial reporting, basically. And for them, I think they call it F7. And here we're basically calling it paper 7. But they are quite some materials of SCCA that you can also be able to leverage on, even Open Tuition. There are quite a number of videos. Why I'm saying so is that I'm also telling you that this paper, you need to do a lot of learning beyond the class. Because, for example, if we have about 25 topics, and that is on assumption that you're covering each of the topic every time you meet, and that means you have to meet 26 times and 25 times. And if you're studying this paper, let's say in 3 months, okay, or so. So it means that if you're meeting, let's say weekly, you have 4 times in a month, and 4 times in a month times 3 months, that is about 12. Yeah. So even if there are 4 months, that is about 4 times 4, that is 16. So you have, for you to be able to comprehend very well, you need to put in a lot of personal effort to go through past paper questions that will build your competence beyond just the class. So that is just mostly an insight for you to just see that you're taking everything ahead very seriously. There's some of you that, of course, that are coming maybe fresh out of university. So you've covered similar course units. So for you, it will be much easier. And says these standards are not maybe new to you. So means that you're going to, of course, there are those new standards, there are those that have changed. Like I've given you an example of IFRS 15, which replaces IAS 11, 18, and so on. So if you studied those days back, then you need to refresh your knowledge. But I think the concepts are not really new. And when you get onto the standard and even see its application, I think it will really get very easy for you to see how to progress with the paper. But practice is very important. Of course, an element of speed is also important, because if you're getting to an examination and this exam is 3 hours and you already have question 1, that is they're telling you select only 3 questions. Of course, yes, there are 3 questions, but it takes time. It takes time. So you need to be able to master the aspect of time as well. So practice. If you can be able to find a study partner who can be able to help you with whom you can be able to sit down together to just go through some numbers together and share knowledge, that could also be very helpful for you to be able to pass this paper. It's quite detailed. Of course, the pass rates for this paper, I think if you're quite familiar with ISPAL, most of the pass rates for such papers around 50s. They usually do not, they're not so much up there. And why of course, such kind of things usually happen sometimes is because people do not give these papers enough time. So because they do not give the papers enough time, what happens is by the time the results come back, they are being surprised because they did not prepare very well for the exam. So it's important for you to just put in your best in this paper, do enough preparation, and see how it can go. Yes. So that is it for financial reporting. Of course, as achievers, the classes are on, and they're going to really be fast-paced to see how to support you pass this paper. But there is need really, like I said, it's very important that you are aware that what is going to make you pass is not just attending the class, but also the time that you put in regards to studying on your own will really play a big role in ensuring that you're not just passing this paper, but you're also getting reasonable marks. Remember, this is a financial reporting paper, and if you get good marks out of this paper, it helps you in being able to even position yourself, let's say, for opportunities basically here and there. So that is what happens with CPA. Just wanted to see what was the pass rate of this paper. The pass rate was actually really not good. So this is a paper. The pass rate is not really good. It was actually at 24%. So 838 students sat for the paper, but 204, only 24.3% passed the paper. That percentage is not good. So it shows you what exactly that really means. So let's see how we can be able to build our knowledge so that we are at least part of the people that are passing. So the pass rates are not really good, of course, even for other papers, but yours is to ensure that you're at least part of the statistics of those that are passing. And this is not just this is not discourage you, but this is just to give you an insight into the journey ahead of you, so you know the kind of efforts that you really need to put in regards to the paper. Okay. Yeah. So I know that there are some people that have not yet joined the classes, but would like to join. So I would want to give you an opportunity. If you're watching this as a recording, then you can be able to just reach out to +25678360218. Just send me a WhatsApp on that number, and then I'm able to provide you with information on how you can join the classes. We also leverage so much on recorded classes where you're able to get a topic pre-done by the tutor, and then you're able to go through on your own, but it requires a lot of effort on your side. So it's quite important to just know that if you want to pass this paper, you need to put in quite a number of effort. Like I said, this paper is very similar to the one of SCCA. So if you're doing the one of SCCA, these materials would also be very helpful to you in regards to passing this paper. So I appreciate you for listening, and I'd like to end here.